Boy, oh boy, another wild day comes to an end. Hope you guys made some money out there this afternoon, but it's back to work tonight, right? Wednesday evening, getting ready for a big Thursday trading session. We survived Powell this afternoon. We get a brand new month starting off tomorrow morning, and boy, some really nice moves on the charts this afternoon and some great trading opportunities coming for Thursday. As always, I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. Before we jump in and cover all my favorite setups for tomorrow, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And as always, I appreciate you guys tuning in. If you guys enjoy the video tonight, do me a favor. Will you hit that like button? Thank you so much for tuning in and supporting this YouTube channel. But enough of the intro, right? Wednesday is behind us. Thursday is coming at us here tomorrow. Got a brand new month starting tomorrow. So where are the money-making trades setting up for the first day of the month of December? Well, boy, everything looking pretty bullish right now, right? Markets loved whatever Powell said this afternoon. Markets were loving on it, right? Nice, big, strong bull runs for the S&P and the Nasdaq. We definitely have a lot to cover tonight. We got some pullback opportunities tomorrow, obviously. Got to be anticipating some ranges and an uptick in volatility. We'll talk why I say that here in a moment, but lots of great pullbacks and range trades I'm tracking for the S&P and Nasdaq. If you're an S&P trader, Nasdaq trader, you'll want to stay tuned for more here tonight. We get some great trades setting up for tomorrow. Oil, of course, is range bound, more of a bullish market with a range on the oil right now. We definitely have some head fakes, some bear traps below us. We get some bull breakouts with lots of great trades setting up for oil and potentially some big news coming for oil tomorrow as well. So we'll definitely talk about that. If you're an oil trader like we are in our trade room, you're going to love tonight's video. Now, tomorrow, first day of a brand new month, right? Thursday, before we jump in and talk about all my favorite setups on these markets, let's all get on the same page for tomorrow. There are three kind of main categories that you want to be aware of for tomorrow. First of all is the news. The big news tomorrow is the personal income number, also called the PCE deflator. That comes out at 8:30 Eastern Time. That is very well known as being one of the most widely or closely watched indicators or news events by the Fed. That is definitely something we're tracking tomorrow. And then there we are again, ISM coming in here again this week. We'll have the ISM manufacturing index coming out at 10 o'clock tomorrow as well. So the first component for tomorrow is the big news, right? 8:30 Eastern Time and 10 o'clock Eastern Time. I love seeing news at 8:30 and 10 o'clock because it kind of gets us going early and gives us that last little push into the lunchtime session. So you definitely don't want to miss those two catalysts for tomorrow. The second component that you want to be aware of is, you know, we heard from Powell this afternoon, right? And Powell, where is he down here, right? Powell basically, what he basically did was he alluded to the fact there was potential for, as you can see in the kind of commentary here, potential for a slowdown in the pace of rate hikes, right? We talked about this last night. Everybody was waiting today to hear what Powell would say about the next FOMC announcement coming in the middle of December. Obviously, the markets loved what he said, but if you kind of read what he said, though, he didn't really commit to anything, right? He definitely left the door open, and of course, the bulls in the market love to hear that potential. What I want you to be aware of is over the last year or so, we've seen a lot of times where the markets have interpreted Fed speak one way, markets rally, markets collapse, and then the following day, we start hearing more Fed speakers coming in and saying, wait a second, let's correct what was said, or let's correct what the interpretation to be. Now, this obviously is a very big variable for tomorrow, but we definitely have some Fed speakers, and so I'd like to hear, you know, again, markets loved what Powell said today, alluding to inflation starting to slow down, not needing to raise rates as much. My big question for tomorrow is, we had some really big runs. Will the Fed speakers tomorrow, will they come in and clarify things and make sure the markets really understand? That is something I'm watching for tomorrow. We get a couple of Fed speakers early Logan Bowman, and of course, we'll definitely hear from some more Fed speakers tomorrow as well. That is a component I'm watching. And the third component, the third kind of known unknown, is we're still waiting to kind of see the playing out here of the lockdowns in China, and that of course directly impacts oil, right? Oil, of course, is basically a yo-yo right now based on everything from OPEC production cuts to the lockdowns in China right now. It seems that China has turned the corner on those lockdowns, but again, we're still kind of watching that closely here for the rest of the week. So just to recap, 3 big components for tomorrow. One is the news that we know about, 8:30 and 10 o'clock. You definitely don't want to miss those tomorrow in our trade room. The second thing is will we hear Fed speakers tomorrow kind of backtrack, right? Because they've done this a couple times already this year. And the third thing we're listening in for tomorrow is will we keep hearing any updates from OPEC, from China, regarding the situation happening in oil. So there is a lot to talk about here. Of course, when it comes to news tomorrow, but those are the 3 components that we are looking for. Now, back to our charts here tonight. Obviously, the money is made on the charts, right? We get some news tomorrow. That'll make for a great catalyst. But listen, let's go over all my favorite trades on each one of these markets. Make sure you watch all the way through the video tonight because you will learn different tactics, different scenarios. If you're serious about making money on this stuff, you'll want to watch the entire video here tonight because I do save some. I do try to cover some advanced tactics as you go deeper into this video. Let's go S&P, let's go Nasdaq, and let's go crude oil to wrap things up. Now, real quickly here, upper left-hand corner, you'll notice these are all going to be tick charts, all right? They're all tick charts, so you can find all the time frames in the upper left-hand corner. Also, be aware, too, the S&P and the Nasdaq are quite similar here tonight, so pretty much everything I talk about on the E-mini can be applied to the Nasdaq and very much vice versa. So keep that on your mind as well as we go through. Everything we cover right now on the S&P can pretty much be used on the Nasdaq as well. All right, now, with that said, there really is one very big kind of key insight on this chart right now that really kind of paints the picture for how to make money on this market here tomorrow. And that, of course, is a strong, large move higher. In all reality, there are 2 pieces to this puzzle. One is the strength of that move. If you guys watch my videos, you know that I always say this, right? Anytime we see a strong move in one direction, we know all of that momentum says buyers are going to be looking for a pullback and a retest of that high. It's almost a certainty, right? It's almost a certainty. Whenever we see a big, strong move like that, we know buyers are looking for a pullback. Now, again, as I mentioned before, and again, this also applies on the NASDAQ, I'm definitely interested in seeing how the Fed speakers act tomorrow morning, right? See if they come in and maybe throw some hot water or some cold water, right, on this, lower interest rate hikes, as I mentioned earlier. But as it stands right now, strong move. We're looking for pullbacks and a retest of the high. The next thing is a really big move, right? Like, look at how big that move is. Anytime we see a really big move, we know that in most cases, and the markets are a bit jazzed up because of the Fed right now, but in most cases, this will be seen as basically too high to buy. And so we have to wait for a relatively deep pullback whenever we get a big move higher, okay? So whenever I see a really big move in one direction, I always know I don't want to chase it going higher because we have to think, right? Buyers are going to reject the idea of really buying high and they're going to want a really deep pullback. Those deep pullbacks after a big move higher can be tricky because they feel like reversals. And so we'll talk about kind of how to trade these deeper pullbacks as well. The next thing you want to keep in mind is anytime we see a really big move, if we don't get that deep pullback, we oftentimes will see markets go sideways in a range. I always tell my students in our trade room each morning, whenever we see a big move, I'm looking for a deep pullback, or if we don't get that deep pullback, for example, right, the buyers might be so jazzed up about this right now, they may not take their profit. And nobody might dare sell this thing right now, right, because it's so darn bullish and the Fed's involved, so it may end up chopping around and going sideways. So that is also something I'm planning for the S&P and the Nasdaq. The way I see it right now, we really have three scenarios we need to prepare for. One is to prepare for the pullback, right? That is what's most likely and likely where the money be made for tomorrow. Now, again, that pullback could reverse, right? It could turn into, again, if the Fed comes out and starts talking, well, wait a second, we're not exactly out of the woods yet. You know what I mean? They've done this already a couple times already this year. We'll talk about the pullback and reversal. So that's one thing we plan for. The next one, of course, is that sideways range. And the third scenario is if we keep on grinding, right? They may continue to pick up some momentum here as we go into Asia and as we get into, right, that early part of the overnight session. So when it comes to pullbacks, right, let's talk about pullbacks here. I'm going to cover the up, the down, the sideways here. That way, no matter what happens for tomorrow, you have a game plan to make some money here. Really what I want to see right now is I want to see us pull back off this high. I want to get down into some key areas of support. And just like I teach in our free trading classes, I want to see if I can trap in some of these bears, right? The easiest money you're going to make with a big move up like this is get below the 21 moving average, get down into some support levels, and then look for one of my favorite kind of classic combination entries, which is what I call a failure, right? As bears come in and try to sell off that moving average, think about where all their stops are. Right? Stops get triggered into a pullback combination. This is a very common setup combo. I call these failure into pullback combos. I know you guys will learn a lot of this stuff inside of our free trading course. That's kind of the basic principle of what you want, right? Back up to retest the high, buy the pullback, leave a target, back up to retest the high. Another scenario you want to kind of keep in mind, which is really the more desirable situation, is if this thing really pulls back. Right? I mean, in all reality, we hope for this, right? We hope we get a really sharp pullback because then we get a lot more reward for the same amount of risk, right? The risk-reward ratio becomes very attractive. Now, I mentioned earlier, these deep pullbacks can be very, very confusing. In fact, oftentimes, right when you get to your desk in the morning, right, and you're going, oh my goodness, maybe this is a reversal, right? Because it's oftentimes very strong and very sharp. And again, the reason for these sharp pullbacks is just because the market moves so far. Again, buyers may reject that higher price. In this situation, because these deep, sharp pullbacks, they feel like reversals, you have to anticipate the sellers here are probably going to be trying a little bit more aggressively, right, to get that reversal. So this is where you look for a two-try failure, right? The bears try once, let them try twice, and then again, think about, right, where their stops are. And that's where the easy money is. The easy money is buying right into those stops and get that squeeze right back up to retest the high. Now, oftentimes what happens on these is you're not going to get that. Again, like I said earlier, you're not going to get that failure into pullback combination. Those are not as common on the deep pullbacks because, again, it fools everybody and likes to snap back up again. Most of the time what will happen is it'll jam higher and you'll go looking for a trap entry. Now, you guys know, right? I love traps, and traps are great on these types of scenarios. Deep pullback, trapping those bears, use their stops as fuel, and then on the way back up to retest the high, I look for that strong move, shallow pullback, higher high in price, and that trap is a great way to add a little bit more profit on this before it goes back and snaps up to retest the high. And again, you guys know this because I love traps. We talk a lot about traps in my free trading course, which reminds me, I know that most of you guys and gals have taken the free classes. You've learned things like failures and traps. You're making money on them. I love seeing your emails every week with screenshots of your profit and loss. It's always great, very inspiring for me. But listen, if you're here for the first time right now, if you haven't grabbed that free class yet and learned all of these setups I'm talking about, what I'll do is I'll put a link up there for you in the upper right-hand corner. Grab that link and take my free trading course, because the strategy that I teach in that free video series will show you a simple trick to know where the winners are going to be each day, and I'll give you 4 different entry patterns to make money on that strategy. If you're missing the best trades right now, if you're taking too many losses, grab that link, take that free class. It's perfect for someone trying to make the jump into full-time trading. If you don't see the link in the upper right-hand corner, there. I'll put all the links you guys need in the description of this video as well. So definitely grab that link and join that free class. That way you'll know when you get those deep pullbacks, you'll know how to time the entry properly with those 2 try failures. And then again, grabbing this thing. If we do get that pullback, great, right? But if we don't and it jams higher like this, looking for that trap entry on the way back higher. Now, there's a few more things you want to be aware of on this, right? Now, one more thing. On a deep pullback, a lot of times what happens is on a deep pullback is it gives you a 2-legged pullback. You know, in a perfect world, it'll just pull right back, trap in the bears, and then back up we go for an easy 2-to-1, 3-to-1, 4-to-1 risk-reward ratio. Sometimes, though, it's a 2-legged pullback. So what's a 2-legged pullback? A 2-legged pullback is just like it sounds, right? It pulls back, it goes up, it goes lower again. When that happens, what you want to do is draw that trend line down off that high, and then again, it'll be a relatively deep pullback. So we're still looking for the 1 and the 2, but oftentimes you can use that trend line. The bottom line is be aware you don't want to be buying right into those overhead trend lines. What I always tell my students to do is think about that kind of up and over, right? Again, 2 tries for the bears and try to get that entry, right, off that trend line. Sometimes you may not get it, right? Sometimes you may not. Sometimes it may pull back like that and you're still using those stops, right? It's basically a stop run. Right, it's basically a stop run, right, and going back up to retest the high. So keep that on your radar as it begins to pull back. We know buyers, as it stands right now, would love that pullback. Now, the big question right now is, I mentioned earlier, what if the Fed comes out, early morning tomorrow and says, hold on, back up the truck. We didn't say we weren't going to be raising rates anymore. And right, we've heard this before. Now, how would the market reverse? There's a few different ways you can trade reversals on this. They're not easy. I'm going to give you a warning right now. When markets make these big moves like this, a deep pullback is still very much statistically better off being a buyer on this. However, if we pull back right now, and there's kind of 2 different reversals you want to keep in mind here. One of them is going to be like this, where it pulls back to the moving average. The bears don't try twice and fail, right? No, they come in and they rip this thing and they run it lower. The hardest part about reversals is you can't sell that first pullback, right? It's more likely you're going to come out and fail and go back up to retest the high. If the bears, though, if they can hold that pullback and blast going lower, now we know it's reversal, and now I can mark off that low. I can mark off that high. I love to draw my channels backwards like that, right? So as the market begins to rip lower like this, right, I draw a trend line off the low. I bring it up around those big highs like that, and I love to go out and look left and find some prior swings. These are oftentimes where the best entries are going to come off the top of that channel, right? So I draw it off those lows, I pin up around those highs, and I go looking for any of the entry setups that you guys are learning in the free trading class, right? Like a bull trap above a prior swing, or a buyer failure above the 21 moving average, failure to pull back combinations. Again, you're going to learn more of this stuff here inside of that free class. Where do we think the market wants to go? Well, they're going to have one thing on their mind, right? If we can get that reversal, again, not very likely right now, but you definitely want to keep that as a potential game plan for tomorrow. The other potential reversal is a VTOP, right? Every once in a while, and again, the Fed is involved right now. So let's say, for example, right, they pull back, but now they don't exactly come back to the moving average and blast. Now they kind of sink, and they start to sink and go lower like this. Whenever this happens, strong pop down and that grind going lower, we always talk about this, right? Those pop and grind channels, they're very easy. Mark off that low, mark off that high, and again, like I mentioned earlier, look left, find some prior swings. Prior swings are where traps live. Failures above the moving average, and then of course, right, that pullback combination, right? So plenty of ways to make money on that. Bull trap, buyer failure, pullback combo. And again, we know where the market wants to go if we do get that reversal. Again, right now, probably not going to happen, but who knows? We do want to be prepared for that because, again, this could all unravel on us tomorrow because it's all based on Fed speculation right now. Now, the next big question we've covered most of the buy side and the pullback stuff now. Now let's plan for a range. Okay, these are very, very common. Big move into a trading range. Why don't we do that? And we'll cover the upside too on the NASDAQ, right? Because the NASDAQ and the S&P are very, very similar here right now. S&P and NASDAQ almost identical. The NASDAQ is, again, almost identical, right? We have a very strong move, all basically fueled by speculation. The Fed is not going to raise rates as aggressively in December, and they'll begin to taper things off into the first part of next year. Same basic idea, right? Strong move says buy the pullback for the retest. Big move says, right? Anticipate a deep pullback. Don't fall for that deep pullback. Don't let that deep pullback fool you into thinking it's a reversal, right? We're hoping people do get fooled so we can buy into their stops going back higher. The next thing, of course, is how do we plan for a trading range? Now, ranges are very, very attractive for traders like me. I love ranges because ranges are, once you learn the game plan, it becomes pretty simple. So, most important thing about a range is that ranges act like magnets. So, if we do end up going up into a range here right now, let me actually bring this thing down a little bit here because I want to show you kind of some different ways to trade this stuff right now. So, let's say we do end up, and again, this could easily happen on the S&P as well. When it comes to a trading range, the key is you want to find levels of support underneath the trading range. Then, because we know that ranges act like magnets, all you got to do is wait for price to pull back. Hopefully, we get a lot of rookies that come in and try to short this thing, right? Remember, big move up, deep pullbacks are very attractive to buyers because they're trying to buy at a discounted price. At this point right now, trap in those sellers coming in, and same idea, right? There's that failure into that pullback combination, right? Same idea that we talked about before. Now, as you can imagine, that pullback might be pretty sharp, right? That pullback might be more, like this, right? And if that's the case, now what do? Now we go 1, 2, right? It's a deeper pullback. So same basic idea, right? Strong pullbacks, we want to buy them, but we have to be a little more careful because the buyers, of course, the sellers in this case, are going to be a little more, they're going to be braver, right? They'll be a lot more aggressive on that short. So again, shallow pullback, right? Shallow pullback, it's a failure. Deeper, stronger pullback, give those bears a little bit more patience. Let them try twice. Same idea, right? We're running stops. We're using stops as fuel to go back up into that trading range. Pretty easy general game plan there, right? That's kind of the general game plan. Now, let's get into the good stuff, right? Because that's the basic stuff. The good stuff on this is adding stuff onto it. So, for example, bull market, right? Into a trading range tomorrow. And guys, it could be here, it could be here. At any point we go sideways, we're now waiting for that deep pullback, right, into areas of support, right, into support areas below. We want to trap in those bears. And then the next thing we want to do is, let me kind of draw this a little bit wider here, right? There you go. I can better illustrate this for you. We trap in the bears, and then as we end up going higher, right? As we end up going higher, this is where we've got more potential to make money. We trap in those bears. We use those stops as fuel. Now, your job isn't over yet. Where does the market want to go? It wants to go back and take out that high. On the way back up to that high now we go out, we find that new channel high or trend line off the high. We bring it down off that low, and you know what I want to do here, right? I want to grab that first test off the low of that channel. Right? You'll hear me say this a lot in my videos in the free trading course. First test is the best test. Now, I love traps, right? Those are my favorites. A trap would be great. A seller failure would be great there. But bottom line is, trap in those bears. as we're making our way back up into that trading range, think about that new channel. Again, traps are my favorite. It could easily be a seller failure, bull moving average. They all work. Same setups you guys are learning in that free trading class, which again is linked up in the upper right-hand corner or down in the description of this YouTube video. Now, the next question is what happens when we get back up into that high now? Do we sell that high? Not exactly. It's a little bit too bullish to want to sell that high. You could try. You could try with what I call a crown reversal, right? A crown reversal would be the aggressive way to short off it. I'm not a huge fan of that short though, just because it was so bullish as we rotate. But if you want to take a gamble on it, let those buyers try once, try twice, and grab my favorite reversal pattern, those crown reversals off the high. Be careful though, right? Be careful. I would definitely go quarter size, very small size on that. It's got a good risk reward ratio because the bears, of course, would like to go back and take out that big low. But remember though, you get a lot of momentum. Right? That momentum is very strong right now. So what do we do in that situation, right? What do we do in a situation where we get that range, we get that pullback, we trap in those bears, we get the reversal that we want, and then now the market pops up like that? What do we do? Okay, if we're not going to sell it, we look for breakouts. Right? We look for breakouts. There's a bunch of different breakout patterns that we can use. The three most common breakouts that you're going to want to look for in this particular situation is going to be, for example, a 1, 2, 3 breakout. 1, 2, 3 breakouts are pretty simple. We take out that high, we pull back to that 21 moving average, and we end up blasting, right? They jump through that high, they jump off the moving average. We call these 1, 2, 3 breakouts, 1, 2, 3 reversals. You'll learn a lot more about these 1, 2, 3 moves in my free trading course. Now, what do we do with that? We now go out, we find the channel. Yep, find the channel high, find that channel low, you got it. We drill down and we find entries off the low of that channel, right? That's a pretty simple idea, right? I'm not buying that high. Okay, we're not here to buy high. We're here to buy low. And to get it low, either get a pullback or see a breakout to get that momentum confirmed and then buy it low, right? Bear trap below that prior swing. Seller failure below 21 moving average, right? Pullback combination. Any of those will work. Another one you want to think about is if I have that trading range, I apologize for the redrawing back and forth again, but we go lower, right? We come higher, and now, let's say now, we don't pull back. We don't pull back and jump, right, off moving average. Now we grind, right? Now we pop and we grind. These are very, very common when you've got that bear trap below that low, and the price will kind of slingshot, right, and rip and run higher. A lot of times the bears up here won't stand a chance. They'll walk away from it, and that's what causes that grinding motion on the chart. These are easy, right? Mark off that trend line off the high, find that channel off the low, and think about it. All of that momentum, what is that? That'll be a strong move. And anytime we see a strong move, what do we know? We know the odds are almost guaranteed. Obviously, nothing's ever guaranteed in anything these days, right? But they're almost certainty. We'll see buyers coming in at that low and looking for a retest of that high and potentially more, right, going higher here. We have quite a bit of open space up here on both the S&P and the NASDAQ. You'll notice there's a lot open space up there on the NASDAQ. Over on the S&P, we have some situation, right? A lot of open space up there, right? So if we do end up continuing going higher there after that range, plenty of room for a profit. So that is definitely something I'd be keeping on your radar for tomorrow for a potential range up here. And again, the key components are trapping in those bears, using those stops off support, grabbing that continuation move, going back to that high, right? Failure, pullback, first test, and then trading those breakouts, right? Those breakouts going higher, which again would be like a 1, 2, 3 breakout, find that channel, right? Or a lot of times it'll be that pop and grind as it goes, and we're finding that bigger channel, right? Those are going to be really the most likely scenarios if we get a breakout like that. Now, I'm going to go over a couple more breakout patterns a bit later on in the lesson, right? We get some breakouts, talk about on oil. So if you want to learn more about breakout patterns and how to trade the failures, we'll definitely talk more about that here in a moment. The next thing I want to talk about, though, is the third scenario, right? So now we've talked about the pullback. We got that covered. We know when the pullback turns into a reversal, right? We talked about the sideways movement, which is, again, in a big move like this, we have to anticipate there's a very good likelihood, very good chance it happens some point tomorrow. So be ready for that. The third scenario is, what if we don't pull back? What if we don't pull back? What if the market keeps on grinding and grinding higher? Well, really, in all reality, not much changes. We still have a very high price, right? We still don't want to chase the market higher. What I will do, though, is I'll go out and I'll start to build some of these levels, as you can see here, right? Sort of build some of these levels here, and we'll start to find some more buy zones as we go, right? So if we do keep going higher here, the game plan pretty much stays the same right now, right? We're waiting for that deep pullback, trapping the bears, and back up. Will that deep pullback turn into reversal, and looking out for the trading range? So if we do keep on grinding higher, we don't really change a lot. I definitely don't want to sell the top. These are very difficult to pick tops on these. A lot of times indicators will give you false signals, and I always tell my students, it doesn't matter what level of resistance you're at, right? You could be at the biggest level of resistance on the chart, and if we have enough momentum, we're still going to get that pullback and that retest. So don't worry about, be careful trying to pick tops on this, especially if it keeps on going higher. So we're waiting for deep pullbacks, looking for ranges, and potentially that nice slingshot we talked about there on that trading range. What do you think, though? I'd love to hear your thoughts on this, right? What do you think about my analysis? Do you think the Fed speakers will kind of walk this back tomorrow, or are we looking at blue skies overhead here? Let me know in the comments section. I'd love to know what your feedback is and what your game plan for tomorrow is as well. All right, S&P's done. NASDAQ is done. How about some oil? So oil is a tricky one. Oil, keep in mind, oil is very much a news-driven market right now. We talked about this earlier, the situation happening in China, trying to kind of renegotiate these lockdowns with millions of citizens in China right now. And of course, OPEC has been dangling this carrot in front of us the past few days about potential further production cuts, which they talked about in their last meeting. So those are two big kind of known unknowns right now as we go into oil. So knowing that, until we hear more about those updates tomorrow, there really are two key insights on this chart right now. One, of course, is that really strong move higher. Anytime we see a strong move, what do we expect? A deep pullback and a retest of that high. You have to think the buyers have one thing on their mind right now, and that is take out that 81.38 level, right? So we definitely have to be careful being a seller in this market right now until we can at least take out that high. The next one, of course, is this trading range, right? It's a pretty obvious range, right? Now, this is a tricky one, okay? It's not necessarily a bull. It's bullish, obviously, but you'll notice how they kind of overshot the range here. We talked about ranges a lot on the NASDAQ here, how we may end up going sideways here. There's a big difference, though, between a market that goes up into a range and then pulls back, right? Or a market that goes up, pulls back into a range. Now, why do I say that? Well, because when the market pulls back now, if it pulls back right now, think about all of that momentum, right? It's basically a really deep pullback, which means we have to what? We have to respect the sellers as we try to trap them in down here and back up, right? Now, one more thing too. We've got a big buyer objective right above us there, 82.36 on oil. Would not surprise me whatsoever if we opened up and broke out right up to that buyer's objective. So we want to be prepared for that as well. So really at this point on the oil, we want to be ready for the pullback, obviously, the breakout going higher, and what if we get stuck, chopped up in this trading range right now? Now, of course, that's the easy part, right? If we keep on going sideways here, if we're getting all chopped up going sideways, there's not a lot to do on this. We're gonna get comfortable, wait patiently, and wait for a breakout in one direction. When we do get that breakout, notice what I've done. I've taken the amount we go above the range, I've projected that down below the range. This really is kind of the sweet spot. You'll also notice too, I don't want to overcomplicate this too much, but you'll also notice too, that's also the high of that prior range. Markets love to do this. They love to go into a trading range, right? Break out, right? That classic kind of, we talked about that kind of slingshot breakout before, right? Think about the Nasdaq. We just talked about a moment here, right? Now, they may come all the way back here and use the top of that range. Okay, just gonna keep it in mind, right? That's that to me is a bit of a confusing part of this, because again, it may go lower and it may feel very bearish, but be very careful trying to sell this thing as it goes lower. We'll talk about that here as well. So as we go lower here right now, I like this area, right, for many reasons. What I really got to be careful with though is how we go lower into a range and then break down. So this is exactly where the two-try failure pattern comes in handy, right? We let those bears take it lower, run into a support level below that trading range, and then trap in those bears, right? This is exactly where a two-try failure will come in handy. Why twice? Because of that, the momentum as what we call rotate off the high, right? In my video classes, you'll hear me say a lot about this: rotation off the high, rotation off the low. It's a very big momentum clue that tells you to time your entry properly. We don't need indicators for this, right? We just need that moving average and understanding how the markets really work. Once those bears come in and try a couple times, we now know exactly where their stops are, right? We know where that is now, and now we can buy into those stop losses. Now, the good news about this is that if we can get those stops to get run, then we basically have a move now coming back up. Well, the amount we go below the range is oftentimes the amount we go above the range, right? So, all things equal, if we do take out that, 79.40 area, we should be looking for a symmetrical move back up to the other side of that trading range. The reason I mentioned this is because as we go higher now, this is exactly where you can go out, find that new channel, and grab that first test off that channel low, right? We talked about this on the Nasdaq, right? Trapping the bears, and then as we go back higher, we're looking for any of my favorite setups, right? Could be a trap entry, could be a failure entry off that low, pullback combination. Pretty straightforward, right? And again, we're trying to go back up and retest the high. I personally don't like that short, right? I don't like that short because, like we talked about last night, when you have a bull market into a trading range, right? You run it down, trapping the bears, it's going to want to rip, right? It's going to want to rip, and it's very difficult to want to stand in front of that freight train and try to short that thing. So I'm not a huge fan of that short. Now, the next scenario is what if we don't pull back? What if we don't pull back? What if we just keep going higher? If that happens, this is where one of my favorite breakout patterns comes in handy. We know the market's bullish. We know we have that bullish objective up there at 82.36. If we see a very strong pop-up, look for a shallow pullback to the moving average, a higher high in price, and traps. Okay, as I always say, traps, baby, right? That's one of my favorite breakout trades. These are very common. They're very, very common. Strong move, shallow pullback, higher high in price. That trap it's about as close to a guaranteed winner you're going to get when you get a really strong breakout like that. Now, this is the type of breakout pattern that could easily be applied on the S&P or the Nasdaq, right? So, we mentioned earlier how the S&P and the Nasdaq, with that bullish move, could go sideways, right? If they trap in those bears here, right? Trap those bears in. If they just rip this thing and run higher, it's exactly where now strong move, shallow pullback, higher high in price. That's a very, very attractive breakout pattern. I call these 2-try breakouts, 2-try traps. You'll see a lot of these examples in that free trading course, right? So if we don't get that pullback, and again, this breakout pattern could easily be applied to both the S&P and the Nasdaq as well. Just make sure we wait for the initial pullback on the S&P and the Nasdaq, right? I'm not looking for this pattern if the S&P and Nasdaq keep going higher, right? We're waiting for that deep pullback, and then once we get the deep pullback, then we can go out and look for that rip as it rips back up and keeps going, right? Hopefully that makes sense. So watch out for that breakout pattern going higher, and really for the most part, any of those breakout patterns will work, right? I can pop up, the buyers can hold that pullback, jump off the moving average. Remember, it doesn't really matter if there's a really big level of resistance overhead here. If we see enough momentum, this is why momentum is so valuable for short-term traders. If we see enough momentum on that pop-up, is a very good chance they're going to pull it back and retest, right? So I don't really care where we are if I have enough momentum. It's one of the things I try to tell my students is, remember, if you have a strong enough move, it doesn't matter where you are. The odds are still pretty good. They're going to pull it back and retest the high. Or it's a pop and it grinds, which again, you know, OPEC says something, China says something with the lockdowns, right? These are easily things that could happen here. Breakout, pop up, grind, right? And then find those prior swings. And again, I love to combine the low of channels. You'll see a lot of this in that free video class, right? The low of channels like this with those prior swings for bear traps or failure patterns. And again, you'll see more examples of that in that free course. Or again, that third one, right? Strong move, shallow pullback, higher high in price, that trap setup as well. So a few different breakout patterns look for there. Be careful short of the top, right? That's for sure. Now, one last scenario here that I think will be wise to kind of keep on your radar for tomorrow is, what if we end up really dropping? You know, what if it drops like this? It's very difficult right now on oil to find a good place to short this thing. It is. If we go lower here, we're really kind of winding up, right, for a good failure back up. The reality is, if they keep it going here, then I find myself in a position where it's very difficult to want to sell into that low a day, into support below the range here. So if the market really takes a nosedive here, right, and again, a lot of news right now driving this market, it's going to be difficult for us until these bears can hold this and really keep it going. It's going to be difficult to want to sell this thing as it moves lower. What I'd like to do is, if we can get that really sharp, deep pullback, is look for a crown reversal, right? In other words, let the bears try a couple times, right? Let them try to sell that pullback. And if and when they fail, again, we talked about a crown reversal earlier on the short side. This is what a crown reversal looks like on the long side, right? Strong move down says bears want to retest that low. Let them try once, let them try twice. The best entry is that trap, right? Just because it's such a strong move down, they want to retest that low. The best entry is that trap. Sometimes we don't get it, right? Sometimes all we get is something like this, where I can draw a trend line off those highs. I can bring it down off that low, right? And sometimes all we get is a jump off of that hidden channel, right? So just be aware of that really deep pullback, trapping in bears, and then back up we go from there. And obviously too, right, as the market now begins to go higher here, we definitely have potential now for a new channel coming up. Find that new channel. You get the point, right? Same basic ideas we've talked about here already. All right, guys, so just be careful on those sharp move lower right now. There isn't a lot of really easy open space down here to be a seller, right? So it may get that big shot lower, trapping those bears, get that thing going right back up into that trading range, and then grabbing that new channel, grabbing those traps, and finishing off that run back to those highs. That really could be very likely for tomorrow as well. All right, guys, as always, I try to go over all the most likely scenarios that's coming for tomorrow because, you know, if you try to predict what's going to happen, that only gives you one or two ways to make money. But if you're prepared for the up, the down, the sideways, you're ready for no matter anything, no matter what the market throws at us. So the game plan is all ready for tomorrow. Now all we need is to hear more what happens overnight. Tomorrow morning, though, 8 o'clock Eastern time, we're back in our trade room. We had a fantastic day today. We'll do some more tomorrow. 8 o'clock Eastern time. We open the trade room up every morning. If you're looking for a great place to come out and learn and trade along, if you're missing too many good trades right now, you'll love my trade room every morning, 8 o'clock Eastern time. I have the entire system ready for you. All I need is you. The best place to start, though, is that free trading class. I'll put all the links you guys need to join in the description of the YouTube video. If you have any trouble getting access or any questions along the way, don't be afraid to call the office, use email, use Skype. We also have live chat on the website as well, so please don't be afraid to use live chat as well. You are definitely, I do check comments in the comment section, but I undoubtedly don't get to those questions in the comments as fast as I would like to. So if you need help right away, call the office, use live chat. We'll be here to help out every step of the process. All right, guys, hope you learned a bunch here tonight. Hope you use this knowledge to make a killing tomorrow. And of course, hopefully you'll see you tomorrow morning in the trade room, 8 o'clock Eastern time. If not, we'll come back and we'll do it again tomorrow night and get ready for a big Friday trading session. All right, guys, hope you learned a bunch. Hope you use it to earn a bunch. Have a great rest of your evening. I'll see you guys tomorrow. As always, be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.